Hey everyone, it's Tom here, and today I want to talk about how long we should backtest for. Now, if you watch some of our previous videos, you'll know how important I find backtesting. I think it's really key for every trader to be proficient and to use backtesting as an important tool in their trading. But what we haven't touched on enough probably is how long should we actually backtest for? Should we test for a month? Should we test for 6 months, etc., or longer? And does that depend on the type of strategy? So I thought, what better way really to cover this than to go through it on a video. So I'm going to talk through those topics, I'm going to give you my opinions, going to give you some examples, and hopefully by the end of the video, you'll have a better idea of how to approach backtesting. So yeah, let's get into it. Just very quickly before we dive in, if you're still struggling with your trading, or you'd like to know more about how mechanical edges are traded, I've put together a free video course for you that'll map out and explain everything in detail, along with walking you through exactly how the mechanical rules actually work. If you'd like to watch that after this video, I'll pop a link in the description. You can click through and you can watch that straight away. So let's begin by covering what I mean in terms of backtesting. In case you haven't watched some of our previous videos on the subject, I'm kind of an old school backtesting person. I don't like using any automation. I'll do it manually. And obviously the purpose of this video is to talk about how long we need to backtest for in terms of going back and seeing data really ties into how long does it take us to do a backtest. If this were fully automated, then we could do, years pretty quickly. And there are massive benefits to automating your backtesting. I mean, that's one of the principal ones. We can look at a lot of data very quickly, but we still need to take the time to analyze that data. And I feel that if you're manually backtesting, you can do that live as well and pick up on things. So just to give you a quick recap, this is kind of my backtesting layout really. What I'll do is I'll set up a journal similar to the one we've got here. If you want to know a little bit more about this journal, we did a previous video covering how I set my journals up. And essentially I'll have this and I'll have a screen open for the chart. Now, I usually split this across screens. For the sake of this, I'll try and combine it into one. It might look a little bit messy, but that's just to really get across what I need really to get through my backtest. And essentially what I'll do is I'll plan the backtest out, obviously using the rules that I identified and I want to test. And depending on the market, this will be where it will take me certain amounts of time to do. So the first thing what we'd look at is what type of strategy are we focusing on. So to start with, let's talk about kind of the time period of data that I would have a look for on a particular backtest. Now, most of my backtests are focused on intraday strategies. So the kind of initial rule that I'll apply is I want to look through either 6 months worth of data or at least 100 trades of data. So some strategy I'll test may have multiple entries per day, but some may only have one, and some may even have situations where we have a no trade day. They're also important to record in your journal, of course. We want to make sure we know when there are no trade days, when there are trade setups, etc. But that's a fairly rough guide in terms of what I'll apply. And the key point there as well that I want to mention is most strategies I'll test will be applied over different markets. Even if I'm focusing on a single market and I spot a potential strategy, I'll always want to test that on numerous markets. Now, as I said, that 6 month 100 trade rule, that applies just for a single market. So I wouldn't go and spread that. If I was testing, say, 10 markets, I wouldn't do 10 trades per market. I would complete the first market and then move on to the second. So I would do, let's say we're on Euro USD here. I would say we're going to do 6 months worth of data on Euro USD. Then I might move across and test USD JPY or whatever. So important to remember that we're not going to really spread it thinly around a number of different markets because you're not going to get enough data to see how it performs on each market. You might be thinking at this point, Tom, that sounds like a lot. That's an awful lot to gather and to do it manually. And appreciate it is, but I think when you're going through backtesting, you've got a bit of experience, you can see, I don't want to say shortcuts, but you can see advantages and ways to speed things up. So we'll talk about a couple of those in a second. But let's have a look first at what we're talking about in terms of the time it really takes to do each backtest. So there's a strategy I've been looking at with a trader recently. I'm not going to do it on the markets that we've been testing. I'm just going to show you it here on Euro USD. But in very simple terms, we've been looking at, I suppose not to give the whole strategy away because I know it's their strategy they're working on. Let's just have a look at saying it's looking at where the market goes after it breaks through the range from the previous day. So if we look at, say, Thursday here, the range obviously on Wednesday will be the highest point here, the lowest point down here. And then what does it do? And they're looking for a specific type of behavior in the market once it breaks out of that range. But essentially, the steps to do a backtest are plan it out on the chart here, which has taken me just a few seconds to do. Then obviously put that information in the journal, check what's happening in terms of, does it meet the specific entry requirement that we're looking at? In this occasion, it doesn't actually, based on their specific strategy rules. I would record that in my journal. If it does, I would record, obviously, the trading entry position and then the result. And one good thing to always remember on the backtest, and if you haven't watched our video on MFE and MAE and using that to improve your trades, that's a key point of backtesting as well, I would always want to introduce. But the whole process for me to check through this and then enter it into a journal, appreciate that I've got a second screen that makes it a bit easier for me to do that. It takes me a few minutes really to just set that up per trade. So what we're generally looking at over the course of, say, a month's worth of trading comes to a little under an hour's worth of work for me to properly backtest it. That's a very rough average, but that's kind of like the guideline I go with. Usually it's a little bit less than that, but playing it safe takes me about an hour to do a month's worth. So if we look back to what I said previously, having a look through 30, well, not 30 days full of this one, but, a month's worth of data and it taking an hour, 6 months, obviously, a full 6 hours worth of work, which you're thinking that's an awful lot, Tom. And you're absolutely right. I wouldn't want to do that all in one go. Absolutely not. So it's good to break that down. And I don't do my backtest in one go. I usually do, say, 6 months worth of data over a couple of weekends, and I'll come back and forward to it. And remembering, obviously, that's only on one single market. I may want to, max it out and go for a few different markets, fill in that journal completely. But one other thing that we've got to bear in mind is that as you're getting used to placing, the strategy rules onto the chart and assessing it, it will become a bit quicker. So with this timing, it's really key to understand that we need to break our backtest down into chunks. We can't do days and days and days worth of testing, all in one go. Like 6 months in one sitting is just not really feasible, even if you're the most efficient backtester. It's not going to work. I think that I've certainly got quicker at this over the years, but even so, a month at a time is kind of adequate for me. So we don't want to try and push ourselves there. As I said, I break it down over a couple of weekends. There's a lot of data there to go through, and just scrolling through, it's going to be tedious. You're going to think, I really don't want to be doing this for hours on end, and that's why I break it down into the maximum, 1 month at a time. And I tend to find, as I said, I can get through that in an hour. Key point, obviously, to remember is that once we have that data, what we're going to do with it. We might be looking through our chart, seeing things, and obviously the benefit of doing it manually, the whole reason really I want to do it manually is that I can observe things, I can write things down, I can make notes, I can check what the chart is doing. And if I spot something that's coming up time and time again that I didn't consider when I first laid out the strategy rules, it's something that I can double check at the end of my backtest. And that's really why we want 6 months worth of data as well as a minimum. I know it sounds like a bit of an arbitrary number, and yeah, obviously more is better. I know traders that will do at least a year's worth of data. And particularly if we're looking at something, I should have mentioned this earlier, if we're looking at something that's not intraday, maybe it's even on the 4 hour or the daily or the weekly, obviously 6 months isn't really going to be as much data as we need there. So then I would go up to the minimum of 100 trades, if that makes sense. But once we've got all our data and we've basically put it into our journal, what do we do with it then? How do we review it? And this is the part where manual backtesting really should pay off. So let's talk about that now. What do we do once we have the data? So what do we do once we've completed our test? Well, probably shouldn't use the word completed, but what do we do once we've got to that 6 month amount of data? That was the point that I would really start to dig into that journal. So this example of one here, I've hidden most of the key points here, but just to give you an idea, I'll be going down, I'll be checking results. So, key things, as you can see here, I've gone through and I've checked maximum adverse excursion on this setup and seeing where we lie. Obviously, it's a decent return at the moment. over, I think this was about 6 months worth of data. Win rate, yep, we're not focusing solely on the win rate here. Obviously the R is the key point. But, there are suggestions here, and I've got some notes down in this section here that I could look at improving. So there's already areas that I would go back to. Now, one thing I do get asked quite a bit from traders is, do we do, say, one market, then look to improve it as much as possible, then go on to the next market? I actually prefer to try and do a few markets before I start to assess things. So I may do a journal here for market number 1, and then repeat the test, repeat a journal for market number 2. Obviously, that ends up taking some time, absolutely, because if each one takes a couple of weekends to do, then you're spreading that time out. So it is a balance there. Do you look to improve based on the results from your first 6-month test, or do you want to gather some more information and then have a bit more data to play with? Sometimes it's the former, sometimes it's the latter. There is no perfect scenario there. Just like, as I said, 6 months is a good amount of data, but having more, it's always going to be better. But certainly that is the bare minimum. We would want to have, I would want to have anyway, 6 months worth of data. Or as I said, if you're doing it on larger than intraday, at least 100 trades to go through, and then to start picking them through. I've only done a very brief analysis on this, which is why I'm doing MAE here and making other notes and just checking through those to give me future options to see if I can improve, particularly obviously this number. So that is the process to follow through. We'll do our test. We'll take our couple of weekends per market. You might be able to get it done quicker. Absolutely. We'll make notes as we're going through. We'll make observations. We'll potentially do it on a couple of markets as well, like a couple of additional markets. And then we'll sit down, dig through the data. I usually like to spend a whole weekend digging through the data and then deciding, okay, am I going to go back? Am I going to retest anything? Usually a retest is quite a bit quicker for me. And maybe if there's only one thing I need to change. Sometimes I can already get that retest from the data that I've collected. Potentially, if I've already got MAE, MFE data, for example, that can be really useful and really powerful to help me just do a quick check to see if I can improve results without having to go back into the charts themselves. So they're always things that it's great to consider as you're doing the test and build up that data. But hopefully this is a good idea of what a bare minimum looks like in terms of a competent backtest. At this point, you're probably thinking, this sounds like a ridiculous amount of work. I'm just going to automate this. Okay, I can kind of agree with you. I can see the logic there. Although I'm a real firm believer in the fact that manually backtesting just gives you so many more opportunities to find areas to improve and just to check the results, obviously. And there are also things that are very, very difficult to do backtesting automatically. So a couple of things that I like to do just to make things a bit quicker in terms of testing. I mean, I've mentioned obviously, if you've got a couple of screens, having a chart open always on one screen, a journal on the other, does save time, but that's quite a luxury, I know, for most traders. Certainly one thing I found is, particularly if you're looking for levels-based testing, so like we've mentioned in the example here, looking at the high and the low periods from the day before to see about potential entries the day after. What I always like to do is to go through month by month, or even for a full 6 months, if we're on IG, for example, and mark on those levels before I do anything. I'll use a point-to-point so the lines aren't constant, and I'll just literally go, drag that across, drag it down here. On IG, if you hit the D on your keypad, it duplicates a line, or it duplicates any drawing, should I say, and just mark it on like that. And then I can go through, I can go to the previous day, mark this on here, like that, and like that. And what that allows me to do really is visually, I can easily go through then and just mark on the days where it's a no trade day. I don't have to worry about coming back to. So it saves me a little bit of time there. It can help just that tiny bit. And it's incremental things like that. But, if you're using indicators, obviously get those loaded up. There's all sorts of elements like that I think are quite useful in terms of just saving yourself those crucial minutes potentially. Yeah, just let's say, for example, as well, you might have a time-based stop loss or a level-based stop loss, marking those things on quite quickly. If we know that we're only going to be looking for things past 8 a.m. UK time, I might draw a vertical line. I might draw a vertical line if I get the right one, and just make sure that's at, say, 7:45. So, I can easily tell the cutoff point visually that I need to check the markets. And it's just areas like this that can really help to speed things up. I always like to leave notes on my charts that I can come back and review. It just makes it easier sometimes than typing into the journal on a particular day. Put the text on here. Most brokers will allow to do this. Put a comment on. So check. and I can go through, just always make sure that, I know where that is. If I zoom out, I'm going to be able to easily see it on the particular day that I might need to come back to if I found something that's a little strange on the market. So it's all these kind of areas that just can help speed up things. It depends on the type of strategy testing, of course. Indicators are very easy to load up, so there's not really any prep there required. But if you're doing any levels-based approach like this, that kind of situation is good. And it can just, as I said, save you those few crucial minutes, and just make the whole testing process a little easier. To finish, all I really want to say is it seems like an awful lot of effort to backtest. I appreciate that. I remember when I'd started, and even sometimes now when I start doing a backtest for traders, it can be really an uphill struggle. But manually backtesting is, without any shadow of a doubt, the best way to go about your testing. And the best way to find results and improvements, just like keeping a journal for your live trading and reviewing that consistently. Manually backtesting and actually getting yourself face to face with the data, with the charts, is the best way to learn. It's the best way to find improvements. It's the best way to remove mistakes as well. So I'm hoping that's been quite useful, just to give you an insight into the level of backtesting that I do and where I think, it can go from being a reasonably suitable amount of data to gather to being a really effective tool. If you've enjoyed this and you'd like to see another topic discussed, just leave us a comment below. If you'd like to find out how we trade, a little bit more information, the links are in the description as well, how to get in touch with one of our team, and they'll talk you through our trading process. And other than that, thank you very much for watching. Hopefully this has been helpful in terms of improving your trading, and I look forward to seeing you on the next video. Take care.